Hello everyone, so today I want to go over what an institutional candle is, what an FU candle is, Callum candle, smart money candle, and it's got many names. It's just a candle to show internal liquidity, then liquidity being collected on one side, and then a reversal to show a continuation to the next liquidity point. So I'm going to take a little screenshot here and we can edit it. So what we're looking for, I like to call it a common liquidity reversal, and it's shown on all time frames. So let's say you're going up like this, price starts to create liquidity on both sides, then it goes in one direction, collects that, and then you get a reversal to the downside, and that is the impulse move that you're looking for. And on the smaller time frames you will see downwards confirmations in that price action depending on what time frame it is. But this is the pattern we're looking for, this whole reversal. So when we look at it from a buy perspective, price is going down, creates liquidity, takes the sell side liquidity, then reverse to the upside, and that is a buy confirmation. You will find the confirmations in here in the smaller time frame. Now let's go straight to the charts and you can see it everywhere. So here's the first one. So you can see price consolidated, moved up a bit, came back down. This created liquidity here. Price takes that liquidity, retests this area, then you get a upwards movement. So the confirmations for a continuation up would be in this bit, these two candles. You go to the smaller time frames, so the 1 to the 5 minute on this occasion, and you look for the same sort of pattern being created. So let's just highlight that. So we're going to look in this bit of price action for bullish confirmations, and we're looking for that same pattern but on the smaller time frame. So let's first go down to the 5 minute and we'll scroll down. So straight away you can see here is your first one. That is liquidity being created. Let's get an arrow up. And then price goes down, takes the liquidity from there, and then starts the upwards movement. That's on the 5 minute time frame. So that is an entry there. So you'd enter on the next candle, your stop loss would go underneath it because it's showing bullish support. Now let's go down to the 1 minute time frame, see if we can see any tighter entries. Now here we are. So this is the same thing. Price consolidates in the same area. So you can see there's no kind of setup here. They're just upwards candles. Price consolidates. There is liquidity on this candle in the form of a doji that you learnt from the previous video. These candles goes down just below that doji, takes that. So we took the sell side liquidity, then we got the next two candles to the upside. So that is your pattern there. This pattern here is showing the same pattern, which is the movement up, consolidates, goes down, takes that liquidity from this doji, then you get the movement to the upside. There is your pattern you're looking for. And what that is an institutional pattern or algorithm pattern, whatever you want to call it. It's just a pattern to show liquidity has been collected on the sell side, and now price is ready to move on to the next main area, which is to the upside. So that is a setup there. Price consolidates a bit, red candle, and the previous candle is your liquidity. Price goes below it, takes that liquidity, and you get an impulse move to the upside. This candle retests that previous candle, and that is your entry. Your entry would be on this one, stop loss would be here. So that is matching the smaller time frame with the higher time frame pattern. You can see we got two entries, and that is matching this 15-minute same pattern. So it's liquidity, goes down, collects that liquidity, and rejection to the upside. And on that rejection to the upside, we just pointed out two setups to the upside showing that same pattern. And that's what you want to do. You look at the higher time frames, see where liquidity is, where it's been taken, is it reversing, and then you focus your entries on the smaller time frame. And this is how you get your big risk to reward. And I'm looking at US 30 because to me, I am able to see it very clearly on US 30. So let's do another little example. So that was a bullish example. So we're going to go for a bearish example. Let's go to the higher time frame. The very high time frame. So here we are. So this is it currently happening. Okay. So what you have here is the same setup. Let's screenshot that and we'll edit it. We've got the white pen and you can see we have consolidation. So this is internal liquidity being created. This green candle here is the one that takes liquidity. So that goes up, takes the buy side liquidity here. And now you got a rejection to the downside. And that is your pattern. That is an institutional pattern. You've taken the buy side liquidity and rejection to the downside. So what we're going to focus on is this downwards move here. Go back to the chart. So what we're focusing on is this candle here. Once it has taken the buy side liquidity, which is here. And this is all I do mainly. This is how I form my setups, because you're just following what price is doing. And price relies on liquidity. It moves following liquidity. And if you're focusing your trading plan or your strategy around following liquidity, then you're kind of on the winning side already. Now let's go down to the hourly chart. And you can't really see much there. We'll move that along. Let's go down to the 30-minute. Now you can see here, you have two bearish FUs. One here was created, and then the next candles retested that previous bearish FU and created a new one. So there's double confirmation on downwards movement from this area. But what I'm showing you is a bearish FU. If you watch my videos and you hear me talk about bearish FUs, this is the concept I'm talking about. To create a bearish FU, it follows this same concept. So let's label that up. And we're just going to put these FUs in grey so you know where they are. And that's on the 30-minute time frame. So that would be around there roughly. And that is created of two bearish FUs of all four of these candles. So when we go down to the smaller time frame, let's go down to the 5-minute. What can we see? So we can see on the first one. Let's get rid of that now. That this is internal liquidity. This is the higher time frame liquidity. So all it has to do is push above that line, and we've taken the buy side liquidity. Most people would see this as a head and shoulders pattern, but we're not focusing on that. We're looking at the concept of taking liquidity and moving on. So we're going to screenshot that again. So we've got the upwards move, internal liquidity being created. Notice how it is created just below that previous high from the higher time frame. Then price pushes up, and then that is where you look for your entries there and there. On the reversal, are you getting supported downwards moves? Remember, this is the pattern being followed on a 30-minute time frame and now being shown on a 5-minute time frame. So you'll get some sort of confirmation to show that downwards movement on the 1-minute time frame. So that would give you the big risk to reward. Just got to be patient with it. And then you got the downwards move like that. let's get rid of that. And then price retraced to retest this newly created bearish FU to create a higher time frame double bearish FU. So you're getting multiple confirmations on multiple time frames. And these two candles here is your confirmation, is your support for the bearish side. So you could enter on this FU if you want to. You could enter on this retest, this next candle, or you could enter even closer on the smaller time frames once it retests here. So let's go down to the smaller time frames once again and go back to that area. So this is the first concept, and now you're going up, and what it's doing here is doing the same thing but in slightly different angle. So I won't go into too much depth because it will confuse you. So here's your first one. Consolidation, takes liquidity, then moves to the downside. Now let's change the color. So here is your second one. Creates internal liquidity. So it goes to there. Takes the buy side liquidity and then gives you a little bit of consolidation before the downwards move starts. So in this scenario, you might have been taken out 1 or 2 times if you tried to get the very tight bearish moves in there. But once it moved down, that is when you get the high probability confirmations. Obviously, the more confirmations, the better. But the purpose is you are still following a consolidation, goes up, takes liquidity, and then moves to the downside. You're still following the same pattern. And that is why you've got 1, 2 bearish FUs on the higher time frame. On the 30-minute time frame, you can clearly see those 2 bearish FUs. Yeah, and that is constantly it. And then it is again, consolidation, takes the liquidity, and then moves to the upside. It repeats over and over again on multiple time frames. And if you start from the top and go down, you will be able to piece together these this way of trading. And if you're matching the higher time frame liquidity pool up with the lower time frames, you're likely to get very big risk to reward. It just takes a bit of practice and a bit of patience. So hopefully that helps. Take care and goodbye.